Because as I suggest, there's a lot of different approaches being taken across the world, and some places have really worked really hard to embrace blockchain and digital assets. We look at, there was some talk yesterday, but Liechtenstein, Switzerland, Singapore certainly, Malta, for God's sake, is as a leading country now when it comes to crypto and blockchain, and we see other countries dithering, trying to take their time figuring it out. But those different regulations, I think, represent a really potentially huge change in the world because the world is so much more global than it was even 5 or 10 years ago that entrepreneurs can pick up and go. And the places that are going to offer the clearest regulatory framework might see real industry grow there because the world is, in fact, much more global than it was. So with that, let's get Ben Losky and his entire crew up here. Ben?
I think I'm bringing one more.
Chair coming.
Oh, sorry.
Thank you. Thank you. Great.
Good morning, everyone. I'm Ben Losky. I'm a Ripple board member. Once upon a time, I had a regulatory job in New York at a place called the Department of Financial Services. And it's great to be with you all today and a really distinguished panel of former officials and current officials. I want to introduce Richard Tang. He's the CEO of the Abu Dhabi Global Market. Archari Superode, who is from the SEC of Thailand. Thank you both for coming a long way. Mike DeDuke, who's a former high-ranking SEC official and now a fancy lawyer at a fancy firm here in San Francisco. And Ross Lecco, who is at the IMF, fantastic agency, very important to the world. So thank you all for being here. I thought I would first just turn it over to each of you, and Mike, I'd ask you to speak in your great socks, by the way. Ripple socks, I don't have those. I'd ask you to speak in your former role as an SEC official, but could you each speak a little bit about your agency, what its goals are, and so everyone can get a sense as a level-setting point?
Yeah, so just let me start. Abu Dhabi Global Market is a very new international financial center. We celebrate 3 years old of establishment this month, actually. So when we first started, I think what really intrigues us is a blue sky approach that we're able to have. So unlike when you are able to reimagine the future, reimagine how financial services should be framed and set up and established, it should not be for the analog age anymore. It should be for the digital economy. So that gave us free rein in terms of what we wanted to do, in terms of establishing, on the one hand, rules and regulations that's on par with international standards that adhere to what the traditional players need in terms of operations. But on the other hand, how do we build an ecosystem to really cater for the digital economy? So we wear both hats, both as a regulator as well as the ecosystem developer. And for digital assets, cryptos, we're able to do things, I think, slightly differently from what other regulators are able to do. If you are able to reimagine how the different agencies should be set up, how the regulatory framework should be set up today, right? I do think that in the US, you probably will set it up quite differently from what is being established in the last century. So that's what we did, and I think we have made quite a huge progress on various fronts. We divide into different pillars for both conventional in terms of private banking, asset management, but for digital economy and digital assets, we look at how do we play a key role in terms of nurturing, acceleration, bring about industry adoption and deployment. So we created regulatory sandbox to facilitate the nurturing incubation role. We got plug and play with us to do the acceleration. In terms of industry deployment and adoption, we work on electronic KYC with some of the largest Abu Dhabi banks, money service providers, to lower the cost of onboarding for everybody through a shared utility. And of course, cross-border, we were working with Singapore and Hong Kong on the Global Trade Connectivity Network to bring about trade finance on a blockchain platform that really bring about faster, more efficient cross-border trade flows. So those are things that we did on the ecosystem development part. But on the regulatory part, we also came out with a very comprehensive regime that governs crypto spot exchanges in June this year, sorry. And that really goes beyond what you see traditionally, just regulating them as money service providers, because it doesn't quite address all the key risks that some of these activities bring to the marketplace. So we look at custody risk, financial crime, AML, exchange operations risk, investor protection risk. And I think by far we have created one of the most comprehensive network, working very closely with institutions to say what are the risks that you need to resolve for you to participate in this space. And we need the institution players to come in. Otherwise, you're going to see a lot of price volatility in this space, right? In any market where it's only predominantly retail or sophisticated investors, you're going to see that price volatility until you can bring institutions to become meaningful players in that space. So that's what we have created. We have gotten very good response on that front. But happy to speak about other things.
Great, thank you. Please.
Okay. Hi, everyone. I'm really honored to be here. I'm from the FinTech department of the Securities and Exchange Commission Thailand. Of course, as a securities regulator, on one hand, our role would be to ensure investor protection, to ensure fair, efficient market. But on the other hand, the SEC is also reactive in playing the role of facilitator and enabler to encourage useful innovation to make it happen in Thailand, including those with blockchain technology behind the innovation. We try to amend our regulation, create sandboxes, temporary regulations to make those innovations happen. And on digital asset front, Thailand actually just in May this year, we just launched we call it the Royal Decree on Digital Asset Businesses, which give...
I always wished, by the way, when I was at DFS, that I could call what we did a royal decree. They wouldn't let us do that in New York.
Yeah.
It has a nice ring.
Anyway, so I forgot. Okay. So the new law will basically give the SEC to be the first generation of digital asset regulator in Thailand. So we find that kind of cool. But I will talk more about those laws later.
Great. Thank you.
Thank you.
Mike?
So I started looking at blockchain and Bitcoin when I was at the SEC in 2014, and the SEC started looking at it several years before that. And what I was really impressed with when I was at the SEC is how proactive they were. A lot of times the SEC is criticized for being reactive, seeing a new financial product and reacting to it and trying to regulate by enforcement or some other way. But what I saw was an agency that is embracing the technology, even though it may not seem that way. But they formed an internal working group back in 2014. I was one of the original members, the Digital Ledger Technology Working Group, and they really wanted to understand this. They knew this was real, and this was a new technology that was going to be transformative, and they really wanted to understand it and get their hands around it. So they formed this working group, and they tapped people from all around the commission, and they really tried to dig in. They brought industry experts in to educate the working group and other members of the commission and other members of the staff. And so I was really impressed with that, and I've seen that continue as the Digital Ledger Technology Working Group has grown. It's since changed names a few times, but it's grown, and I don't know how many people are on it now, but it's a lot larger than it was back in 2014. And so I'm just really impressed, and the SEC, as you all are aware, has made a lot of outreach to the industry and sort of opened their doors and said, come in, we want to hear from you, we want to talk to you. And I'm really impressed with that. I think that they are criticized for a lot of things, but they are thinking about this new technology and this new asset class in a very pragmatic way, which I think is really helpful and useful for the industry.
And Mike, I think a lot of people think of the SEC primarily as a disclosure agency, and maybe, my view has been the SEC is an enormous organization that does a lot of different things. Could you just talk a little bit about when you have that working group together, you've got people who are interested in disclosure, but you've also got people interested in accounting and people interested in corporate finance and people interested in IPO rules and ICO rules. Can you talk about how you break that down in your own mind?
Sure, absolutely. So the Digital Ledger Technology Working Group brought together people from all over the commission. So At the time, I was working in the Division of Investment Management in the Chief Counsel's Office, so my division was responsible for the regulation of investment advisors and investment pools, so think mutual funds, hedge funds, and advisors to hedge funds. So I was one of the representatives with a few colleagues, and then there's another division of trading and markets which regulates broker-dealers and exchanges and platforms and alternative trading systems, and there were representatives from the Division of Corporate Finance, which regulates the offer or sale of securities, IPOs, and public companies as you think about them. And then there was representatives from the Division of Enforcement, because at the time it was on the heels of Mt. Gox, and a lot of fraud was happening around this area. So it really was a collaborative effort, and sort of bringing together people from all the with different expertises to trying to get the best knowledge possible to understand this and get ahead of it.
Thank you. Ross?
Well, thank you. The International Monetary Fund, I think, as you know, is a public international organization, a little bit like the United Nations. We have 189 member countries, almost every country in the world. And our mandate is to promote the stability and effective operation of the international monetary system and the global financial system underlying it. And we do this through three basic functions. We engage in continuous surveillance over the global economy. We have regular policy discussions with all of our member countries. We provide emergency lending if a country has a balance of payments crisis. And we do a lot of technical assistance to countries, to the governments and central banks, to help them strengthen their legal, regulatory, and institutional frameworks, particularly in the financial sector. I should say that given that mandate, our interest in fintech generally and crypto assets in particular is fairly obvious. And we've been involved in this space for a little bit over 3 years. Christine Lagarde, our managing director, has been a driving force behind this. And we put in place a couple of years ago a multidisciplinary staff team, a little bit like the SEC, that I have the privilege of co-leading, to study fintech and basically to lead our work in this area, which I'm happy to talk about a little bit later in detail, if you like.
Thank you. So next question for the two current regulators on the panel. I'll say as a former regulator, I get asked a lot, where are things headed? Where are we? What's going on with regulation around the globe? And my answer is usually, well, it's evolving, and it's evolving in the right direction. Mm-hmm. And then the question becomes, well, a lot of people get impatient and they want to know why isn't it evolving faster and when will it evolve? I thought I would ask each of you, I know as a regulator, we at DFS went through a process in 2013 where I think about it as sort of ignore it, think about, get educated, and then ultimately regulate it. It was sort of a cycle of denial, grief we went through, and we first learned about digital assets, and then ultimately came around to the decision that the best thing to do here was to regulate, because it was that important, and that ultimately regulation would lead to much more significant institutional involvement in the space, and once you had global regulation, you could really start reaping the global benefits of these amazing innovative technologies. Can each of you talk about how your respective agencies came around to evolve to regulating in the digital asset space?
Sure. So if you look at a year ago, I think most global regulators are still of the view that this asset class might go away and choose not to touch, not to regulate this asset class, right? But in the last 3 to 6 months, I would say that there's quite a drastic shift in that sentiment to say, look, it's going to stay. Let's look at what is the right regulation for this and how do we approach it in the right direction, from IMF to G20 to Bank of England, all making pronouncement to say, look, this asset class is here to stay. How do we bring about the proper regulation for this asset class for it to grow? We have not quite reached the end stage yet. I think all the different regulatory regimes are gravitating towards understanding this asset class much better, and then what's the best framework to regulate them. For us, it's slightly simpler. I do think that from day one, because we are a relatively young organization, we don't have a lot of legacy issues to deal with. So we are able to bring in the right expertise, the right framework, the right people to look at the technology and coming up with sensible regulatory regime to regulate the different asset classes that we are seeing in the marketplace and trying to adapt that as quickly as possible. I think speed is something that is in our advantage. on that front to come up with rules and regulations that's adapted for the asset class. Right? So again, going back to, let's say, I'm just going to give you the example of last year we came out with our guidance notes on ICOs. Security tokens, we support that. We support ETFs. For those that don't fall under the definition of security tokens, we define them as commodities. And I think that gave the industry clarity on how to move and how to proceed with the various options that they can develop on that front. And this year, when we come out with our consultation paper on the crypto spot exchanges, again, it went through quite a deliberate process of working with the different stakeholders, from institutions to digital exchange players, to say, look, until and unless we bring in the institutions, and until and unless we address the risks for the institutions, they are not going to play a meaningful role in that space. So how do we bring them in? I think is an important question that we all have to try to address and answer. And we take the lead on that front, bring the different parties together, work on a framework that we think is sensible enough to bring trust and confidence in this space. So I think that's has been our approach so far.
Yeah, that was certainly what happened in New York. We saw over time was that you put the regulatory framework, which we did in New York, known as colloquially as the BIT license, yes. And we did see certain institutions start to get involved. Certain players dropped out, but then the players that stayed in the regulatory framework ended up having a lot more confidence from people who were doing business with them.
Absolutely.
And so then there became a pretty big desire to get the license, because now there were these market forces driving sort of good change. It was sort of a race to the top. So, I mean, have you seen that happening yet?
Yeah, so responsible long-term players that's passionate about the growth of this asset class over time. They are just not into it just for short-term gain, for 2-3 years gain, right? So they are looking at how to grow this particular asset class, how to support this movement. I think they are all moving in the right direction to say, hey, look, your regulatory regime has pretty high standards and high watermarks, and we explain to them why we do so. And they buy into that and say, oh, that's good. And that's where we can get the institutionals excited and involved. And we are talking to the institutions, they look at it, we socialize our framework quite freely with international regulators, from Singapore to London to Switzerland, and they think that this is the move in the right direction. And hopefully we'll gravitate towards the common standard over time that give clarity to industry players on how best to move forward on that front.
Archar, do you want to talk about how in Thailand you all evolved to where you did?
Yeah, sure. I think in Thailand it's quite similar in that there are very diverse views on digital assets. On one hand, there are people who believe that it's like all sorts of evil. People actually come to me and ask, "You want to make Thailand like a casino for digital asset or something like that?" But there are also people who believe in these technologies and the potential and really want to embrace it while tackling the concerns with regulations and other tools. So basically, the SEC Thailand, of course, we are the securities regulator, and before our authority derives from the Security and Exchange Act. So we would be able to regulate only like ICOs, but there are quite a lot of concerns like on scams, on volatility of cryptocurrencies, on money laundering, like CFT issue as well, and also so basically in the end we think that these issues will not go away, and if we like close our eyes or ban, problems will happen anyway, and we would not be able to do anything about it, or maybe we will not have any information or tools. So in the end, the government kind of get all the relevant agencies together and to talk on how we should tackle this. And it was decided that a new law would be passed to give the SEC the authority not just to regulate investment token ICOs that are securities-like, but also utility token and cryptocurrencies. And once we get things going, it was really quite quick. I think it took us like just a month to draft the law, and we launched it in like 2 months later. So
And
I
does
think,
that include exchanges as well?
yeah. So basically, the new law govern 2 key areas of activities: ICOs and exchange broker dealers, intermediaries in crypto asset space.
Great, great. Let me ask Mike and Ross to just talk about where you see, because we're on the topic of evolution, where the two of you see your respective former agency and your current agency. Where do you see things evolving in the digital asset space in the, call it the next 5 to 10 years? To me, it feels like we're on the brink of just a lot happening from the regulatory perspective around the globe. I know we're tracking something like 39 countries who are all doing interesting things. We have 2 of them here today. Where do you see the SEC and the IMF going in the years to come? Please go ahead.
Well, maybe I should first say that the IMF, I think, has taken a somewhat more balanced view towards crypto assets than some other commentators. You know, we certainly see the risks that they present, things like money laundering, terrorist financing, evasion of sanctions. But we also see the enormous potential that they have to make the financial system globally more efficient and more inclusive. But we believe for that to happen, you have to have effective regulation in place, in the sense that trust is the glue that holds the global financial system together, and regulation is a critical component for trust. In terms, maybe I should first say what we're currently doing and then where we see the work moving forward. The IMF is, as I say, quite actively involved in this area. We're doing a number of things. First of all, we're engaging in very extensive research, policy analysis, and publication on fintech generally, but particularly crypto assets. We published major studies over the last couple of years on cryptocurrencies, the risks they present, and potential regulatory responses, and also the potential impact of fintech, including crypto assets, on the structure of the global payments market. And we have more work to come. Secondly, we're consulting very closely with the industry. You know, we realize that to really stay on top of what's going on, we have to consult with the people who are actually doing the work. And it was for this reason that about 1.5 years ago, we put in place a high-level advisory group of external experts and industry leaders as a source of guidance and really as a sounding board for things that we're doing. And I'm happy to say that Chris Larson kindly agreed to be part of that group, and we're very grateful for the contributions that he's made, as well as other people here at Ripple, like Brad Garlinghouse and Ryan Zagone. The third thing that we're doing is using our convening power to bring together representatives of our 189 members to talk about their experience with fintech and crypto assets, the concerns they have over risks, the potential that they see, and the regulatory responses that they're considering. And this has been, I think, an invaluable forum for countries around the world to really understand what other countries are doing. You know, I think one of the big challenges in providing advice to countries right now on these issues, and we do typically provide a lot of advice to countries on regulatory frameworks, is that, you know, with the possible exception of something like anti-money laundering, the international best practices aren't there yet. And there's not a lot to draw on as standards that can help guide regulation. I think it's very encouraging to see the work that Abu Dhabi Global Markets and Thailand are doing in this area that may help serve as examples for the rest of the world as they think through these issues. You know, in terms of where we go moving forward, I think obviously the space is going to continue to grow. There's a huge amount of innovation in the private sector, but also regulators, as Ben mentioned, are thinking about how to design regulation. I think as you get a greater body of experience, it will be easier to provide advice, I think, for everybody to provide advice to countries on how to address these issues. You know, maybe I can just lay out, with that being said, a few guiding principles that I think we thought about that may help serve as a basis for countries to think through the issues. My former colleague and current friend, Sunil Sabharwal, mentioned some of these yesterday, but just briefly recap and perhaps supplement them. You know, the first is, you know, as new types of service providers enter this space, I think it'll be necessary for regulators to supplement their traditional reliance on entity-based regulation with a greater focus on activity-based regulation. As different types of service providers like a bank and an exchange offer the same service, they should be subject to the same rules. Secondly, it's very important for regulators to consult with the industry. And I think the whole regulatory sandbox experience has been an example of this, where regulators have an opportunity to learn from new products as they're being tested in ways that will inform regulation. Thirdly, I think proportionality is critical, that we have to address the risks, but we should do so in a way that doesn't stifle innovation to the extent possible. Fourth, I think we should not underestimate the changes that will be needed to the legal framework beyond regulation. If you think of basic things like payments law, insolvency law, property law, looking at crypto assets and using them for payments, changes will probably be necessary. And finally, of course, international cooperation is essential. And I think that these are all things that we'll be considering as we move forward in working with our members.
Thank you. It's excellent. Mike?
As I mentioned before, the SEC has opened its door and has really extended an arm to the industry to really invite them in and hear about what's going on. So that's one track that's going on. But at the same track, there's another track that's going to be going on in parallel. It's enforcement. So I think in the short to medium term, you're going to see a lot of regulation by enforcement. Specifically, I think the SEC foreshadowed its enforcement on tokens that are securities in the token lock case that came out about 3 weeks ago. The token lock case, if you're not familiar, was the first action against a platform, an unregistered broker-dealer, since the Dow report from 2017 by the SEC. And in the token lock case, it was the founders and the platform handled over 200 token assets. And the SEC found that some of those assets were securities, so they charged them with operating as an unregistered broker-dealer. Interestingly, the SEC in its order didn't specify which digital tokens were securities and didn't provide any analysis. So if you think about it, there's got to be another shoe to drop with those specific tokens that are securities that SEC hasn't gone after or they're currently going after. So I think in the short to midterm, you're going to see a lot of regulation by enforcement. Also, I hope the SEC continues to think about the concept of mutability. The concept of mutability is one that my firm has been engaged with the SEC about. The concept is basically you can have something as a security that is no longer a security after certain circumstances happen. So during the development phase, a token is a security and either offers under private placement. But once an event happens, whether there's full functionality on the network and of the token, or the token and the network becomes fully decentralized, that security is no longer a security. It's a non-security, and it can be used on the network as intended for goods or services. And so I hope the SEC continues to engage the industry on that concept, because I think it's very important, and it's really important for the SEC to understand and for the industry to accept and evolve with.
Fantastic. I want to leave enough time for questions, so maybe we could do a quick round here. I just had one major question to ask you that's probably impossible to answer in 1 minute, but if you could each try. President Clinton yesterday spoke about not killing the golden goose, and he spoke about it in sort of two respects. One, he said if you have regulation that is too onerous, you could kill the golden goose and the innovation will be stifled. On the other hand, if you have no regulation, the goose could die on its own. And to me, I translate that as the really tricky role of the regulator here, and we wrestled with it when I was at TFS, is how do you promote the innovation but have sufficient guardrails in place that the goose thrives right in that sort of middle space where it's not running wild and thus going to run into the street and get run over, and at the same time the golden goose isn't stifled completely by onerous regs. So can you each of you just give us 1 minute on how you think about that very complex concept and challenge?
Very simply, for regulators like myself, don't imagine the worst. That's always what regulators do. They always think of the worst case scenario that can happen. But how do you balance it with the benefits, and how do you deep dive enough to understand the technology and the risks involved? I think that is critical for the next phase of growth.
Thank you.
For me, I think regulation can never catch up with technology. So maybe regulator has to have an open mindset and willing to work with industry and fine tune along the way, and also have to find like a mixed use of other tools. So not just regulating, but allowing like innovation to grow as well. So I think that's important.
Mike?
I think it's important for the SEC and other regulators to realize that the laws that were adopted a long time ago, in the SEC's case back in the 30s and 40s, were meant to be flexible and were meant to evolve over time as financial products and the financial markets evolve. So I would ask that they be open-minded, pragmatic, and realize that that these new innovations need to work with the laws and not work against the laws.
Ross?
I would agree with Michael, actually. I think that one has to be flexible. A flexible approach, I think, is critical. But I also think that it's important for regulators to, I think, be very focused on risk, in the sense that focus just on managing what's necessary to mitigate risk, rather than going overboard.
Great. So let's take some questions from the audience. If I can see you out there. And over here, gentleman here.
So maybe a fun question. From each of your perspectives, do you think XRP is a security? And if you had to guess, what would you think the SEC would say?
Should we start with our SEC expert, Mike?
I don't think XRP is a security. I think XRP is a currency, and the reason why is when you think about the test that was laid out by the Supreme Court in 1946 in the SEC v. Howey, which is, you've probably all heard of the Howey test. It's a 4-factor test: investment of money in a common enterprise with the expectation of profits based on the efforts of others. And you have to satisfy all 4 prongs. So if one of those prongs is not there, you're not a security. So with XRP, Ripple could go away and XRP would still exist. And so there's no efforts of others in my mind.
Anyone else want to take that one?
Based on the framework that we have developed, it wouldn't fall nicely within the securities definition. So for that, I do think that for us, we regulate it more like a commodity than a security at this point in time.
Ross?
Maybe just one point. I don't want to express a view on XRP, but I think in determining whether particular tokens are securities, it's important to remember that this is a global issue, and one shouldn't focus on the treatment under one jurisdiction. Different countries have different definitions of securities, and you have to look at it more broadly.
Okay, other questions? Since we got that one out of the way.
Hey, is there worry that with the reporting requirements for securities regulations and potentially having that apply in many jurisdictions because of cryptocurrencies overlapping and their reach, is there worries about those reporting requirements being too onerous? And has there been any thoughts on ways to mitigate that or sort of limit that to one jurisdiction, or have some kind of something to like let one reporting system like reach across different countries?
And maybe I should, if I can, take the liberty of generalizing that question. Mike, we'll start with you because you can address it directly on the disclosure question. But I think generally there's this larger question of overlapping regulation around the globe. I know when I was at DFS, I once got accosted in an elevator after a speech by a very angry gentleman who said, "Who the heck are you, a New York regulator, to set the world's global standards on cryptocurrencies?" And I said, "I actually agree with you. I think other global regulators will step up, and ultimately we will have global regulation. But until that time, in New York, we have a burgeoning industry that we want to continue, but we also need to have guardrails." Can you each talk about how you think about overlapping reg around the world? And maybe we'll start with you, Mike, on the SEC question.
Sure. I see that right now in the United States with the SEC's definition of security based on the Howey test from the Supreme Court case back in the 1940s. And then a lot of the states, or many of the states, follow the Howey test, but they also have their, I think it's 16 or 17, I could be getting the number wrong, also have a risk capital test. So just within the United States, you have state regulators regulating a security or defining a security as something different than the SEC, which is the Securities and Exchange Commission, which regulates security. So just with our own borders, we have some disparity in terms of what the definition of security is, which hopefully which seems it would be better to have that harmonized and to everybody be working off the same definition to sort of minimize the costs and the regulations involved. And so I think that's an example of sort of what you were talking about, just different disclosure regimes around the world happening right within our borders.
Ross, you want to take that one?
Well, I would just say that I'm not sure that overlapping jurisdiction is something that is unique to crypto assets. I think it happens in a lot of different areas of the financial sector. And to deal with it, I guess, first of all, one has to put in place effective coordination mechanisms between regulators. But then, hopefully, over time, you'll see some sort of common standards in designing regulation that will reduce to some extent the frictions involved through overlapping regulation. But I think in the crypto asset space, we're very far away from that now.
Yeah, it feels like some of that is going to come down to a lot of education and a lot of communication between regulators. We certainly, when I was at the FS, we certainly had that kind of communication on a lot of other types of non-crypto related issues where we would be getting, teams would be getting on planes to go see each other, whether it was in France or Basel or where have you. And maybe that's coming in crypto, but maybe we're not there yet.
Exactly.
On overlapping of regulations, I agree with Ross. But for Thailand, we placed quite stringent requirement on disclosure because we want to have the investors to have enough information to make informed investment decisions. For example, they have to provide filing with the SEC with certain topics to address, although we don't specify the format. And they have to update every 6 months on the proceed and the progress of the project. So although that might be quite a bit more strict than the usual ICOs, I think it's useful and of course our regulation will be perfect from day one. So I think at least it's a starting point, and then we can fine-tune it along the way and see how things go.
So if you look at globally, there's a whole spectrum of regulatory treatment on cryptos, from, on the one hand, banning it totally, to the other hand, treating all cryptos as securities. So the next phase of work for regulators really is to try to drive towards a common understanding of the characteristics of cryptos, how do you define them, come to a common agreement on that front, even before you start thinking of the common reporting standards that you're talking about. So I think the next phase of work is more driving towards better understanding of this space, coming towards common treatment of this asset class.
Other questions? I see one there and there.
Hello, yes. One question is related to actually security tokens. I think one of the benefits of the crypto markets is that they created a global retail market. For most of the retail population, they had no access to some of the investments in some types of asset classes, especially venture capital, when you're talking about qualified investors or so on. And I think we have an advance in terms of the security tokens in which would create access to this population to this type of investments. And how do you guys see the possibility of flexibility in terms of regulations in order to allow for a better competitive environment, especially in the exchange departments, in which would allow some of those crypto exchanges that are not, actually to trade security tokens, following some aspects of the regulations. And I think specifically when you talk about the Brazilian market, which you have a monopoly in terms of exchange, you only have B3, that would be very interesting to have a competitive environment in that extent. So how do you see for your specific regulations? Thank you.
Who's first?
And with our new law, there's no need for the SEC to judge if it's this is, let me clarify, if it's securities, then it still falls under our Securities and Exchange Act. But if it's investment token, utility tokens, it will fall under the new law. But that is quite a challenge, because how do you really draw the line between the two laws? For us, so that might be quite a challenge already, since there might be some who would try to issue securities with digital process, and frankly, some of our laws in Thailand are not quite accommodative for that purpose. So if it's treated as securities, then I think there might be some challenges for us to facilitate for now. But if it's a new law, we have the framework for exchanges and brokers and dealers, and I think that would quite help facilitate those who want to trade digital tokens or cryptocurrency quite a bit already. So it still needs to be fine-tuned a bit for Thailand. Yeah.
So I think the key benefits of tokenization that you mentioned, I think we see all those. We allow for some of those experimentation. So we see real estate being tokenized into bite size for investments, farms being tokenized for investments. So I think there are great benefits in allowing the retail into some of those space with the proper safeguards in terms of disclosure to make sure that they know what they're buying into. But the framework are in place to allow for all those securities tokenization, at least where I'm coming from. So we are seeing some of those things happening in the marketplace.
I guess, one way to generalize the question is to maybe ask Mike. I mean, I've always been under the assumption that, you mentioned short and medium term, the SEC is regulating in this space by enforcement. I've been in that world before, and sometimes you have to do it as a regulator. It's probably not the most efficient way, and probably not the smartest thing to do over a longer term. I've always been assuming that over the long term, you see the SEC and global regulators, securities regulators around the world, putting together frameworks for tokens and classifying different types of tokens, and ultimately laying out what the rules of the road are for each of those different classifications. You see Switzerland already moving in this direction, and some other countries. Do you see that happening around the globe and at the SEC in the US?
I see that at the SEC, and a lot of my clients are coming to me with projects saying we want to do a security token, and I think the impetus for that is, well, they see the SEC pushing back on the argument that something isn't a security, so let's embrace regulation and let's just have a traditional security with an electronic wrapper, which is a security token, and embrace the federal securities laws and apply them to these security tokens. There's some challenges that are still being worked out and will take some time to work out, like how to make sure downstream investors are qualified or accredited or qualified purchasers. I mean, that's a challenge, and then liquidity and making sure that there's enough registered broker-dealers to trade and help facilitate the exchange of these digital securities. But I think the SEC will embrace this because it's staying within the lanes of the federal securities laws, and it's moving forward with technology, which is they're there to promote capital formation, but at the same time protect investors. So another challenge I see is how to get the appropriate disclosure out to investors, because in the traditional securities offering, you give them a 50 to 100-page document with lots and lots of disclosures, risk disclosures, conflict disclosures. But in the digital security world, how do you do that? And that's being worked on actively right now, but that's one of the challenges that the industry is addressing.
Thank you. I saw some questions in the middle. I don't know if we can get to you.
Yeah, from a consumer's perspective, right here, middle.
Okay, sorry, it's very bright.
From a consumer's perspective, how do you see the sequence of events playing out when and if a digital currency is deemed a security?
going to have implications throughout the industry. If something, that everybody for the past 3 or 4 years has thought of as a currency is all of a sudden deemed a security, it's going to have ripple effects, no pun intended, through the industry, which, we can't really understand and foresee all of the implications. But it's, for the longest time, the SEC wouldn't come out and say Bitcoin wasn't a security. Everybody knew it wasn't a security, and internally, everybody talked about it as it wasn't a security. But until Director Hinman came out this June and said point blank that it's not a security and Ether is not a security, no one really had that confirmation. And so there was a lot of uncertainty. So uncertainty is not good for the markets and not good for the development of technology and sort of progression. So I think it would have negative impacts if you have a very mainstream currency that is all of a sudden deemed a security.
I think that we've seen and we've heard and we know that more clarity on the regulatory environment will promote the further adoption. And I'm happy that also the panel mentioned that like the last couple of 3 to 6 months, more and more attention is there also on the global level. And the G20 also called upon like various institutions, either being the Financial Stability Board and also the Financial Action Task Force, to come up with some more concrete guidelines. And as far as I've understood, this month, the FATF will also come up with some more concrete proposals on crypto assets and cryptocurrencies. What do you expect? Will this speed up the further adoption on the global level?
Well, first of all, you're right that the Financial Action Task Force, well, first of all, they were very early out with guidance to their members about 4 years ago on how to apply the FATF anti-money laundering standard for regulation to cryptocurrencies. And they're discussing now potential further changes to build on the experience that they've had previously. Generally, I think with developing international standards, I think it's important to recognize that it's a fairly comprehensive and time-consuming process, in the sense that for standard setters to lay out guidance for members, there has to be a fairly broad consensus within their membership on what those standards should be. And if you're in a new area like crypto assets, beyond anti-money laundering, I think the truth is that for many countries, they're still thinking through these issues and may not be that enthusiastic, frankly, about having something laid in stone now, because that then becomes a standard. They're expected to implement it, and then there are review processes within the standard setter and sometimes other international organizations like the IMF that actually, to some degree, enforce, if you will, the adherence to the standard. So I think in other areas, it's important to recognize that this is an ongoing process, that it really will require a lot of consultation between countries and international organizations.
Thank you. Okay, I think the next growth wave of the industry will come by institutional investors entering the space. In terms of regulation, what is actually the most important factor for professional and institutional investors to enter the space? What's blocking them?
So let me give you my 10-second perspective on that. I think more than anything, institutions need certainty, or some more certainty than they have today. I used to work for a guy named Andrew Cuomo, who's now the governor of New York, and he used to say to me when I was a regulator, he'd say, no is the second best answer, Ben. In other words, if you can say yes to a company who wants to do something innovative, that's great. No is perfectly fine answer, because a company can build its business around that. I'll get back to you, or maybe, or silence is what over time gets very, very damaging for businesses. So when we did the BitLicense regulation back in 2014 and 15, if you look at the basics of those standards, AML, KYC, adequate cybersecurity, consumer disclosures, adequate capital, it's all the basic things you would expect an institution to do and to want from their counterparties and others they deal with in the space. So to me, I think, overall, you want that kind of certainty. I don't know if anyone else wants to jump in.
And not just with regulation, I think with accounting standards, and treatment as well. That's the issues that institutional investors come and talk to us, and they really want to push forward for certainty in this area.
Yes, you want accounting standards and
Yeah.
you want to be able to audit.
That's right. And the other thing is focusing on things like custody risk and technology governance risk, right? So every time coins get stolen, coins get lost, it's going to impact the confidence in this asset class. And until and unless you address all the risks in this space and bring confidence and trust into this asset class, then you can grow it in a sustainable fashion going forward.
The institutional clients that I work with are waiting on the sidelines until there's proper custody solutions in the marketplace, and they're coming. And clients are actively working on those, but custody is a really, really big issue for institutional clients.
Well, just to say that I think in between yes and no, there's a category called yes if, yes when, and yes but. And that's an important part of regulation because it lays out the parameters that people have to observe before they can go ahead with something.
Well, we're out of time, and that's a great way to end. I want to thank our panelists. You all were fantastic. Please give them a round of applause.
Thank you.